Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, and just to let me know that it is working. Just want to welcome everybody here as well. It's fun to see a lot of you guys in the live trading call this morning. I think we had a pretty good call. Got to discuss the scanner and got to post a new trade, limit order setup that I think we can get into this week. We also recapped the Aussie Kiwi trade that we have going right now. It looks pretty good. But yeah, I was debating on what to talk about today. There's several things we could talk about. One of the things was thinking about was going over this banker's close strategy. I was talking to Tyrell earlier actually about this strategy. I haven't taught this strategy in a while, and it's actually a really solid setup. This is one of the first strategies I ever traded. I actually several years ago, I actually passed a FTMO challenge just using the banker's close strategy. This is actually a strategy I learned at another company. Um, like I said, many years ago when I started learning how to trade, this is one of the first strategies that I really uh, kind of went towards, and I kind of resonated with, made a lot of sense to me. And a lot of you guys will probably like this too. It's kind of a pretty cool opportunity. It's a predictable opportunity that happens every day, and it's at a specific time every day. So I'll show you how this works. Although this actually works um, at a couple of different times. I'll show you what times those are. So you can actually look for this. There's a time during the Tokyo session you can find this opportunity. There's a time during the London session, New York session, and also the Sydney session. So I'll show you all four of those. Show you how to find it and how to use this each day. Before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So like I said, we'll talk a little bit about the banker's close setup. So let me kind of explain what this is. I think, let me actually check real quick. I think I even made a presentation on this several years ago, and I just want to check real quick. Oh yes, here it is. Um, yep, this is it. So yeah, I'm actually gonna go through some of this here. I haven't done this in a while. Yeah, this is it right here. Okay, so I'm going to share this with you guys. I made this little presentation a couple years ago. So basically, here's the idea. So every day, international banks need to close out and reconcile their books before the trading day is over. The daily phenomena creates an opportunity for traders and everyday folks like you to take advantage of predictable daily movements. My simple and easy to follow strategy will help you start creating daily and reliable income through the banker's close. So this is pretty cool. Um, so here are the pairs and the time frames. So basically, you want to trade. These are the three best pairs to trade, in my opinion. It's the pound franc, and euro pound. This is if you're going to trade the London bankers close. Okay. So basically, at the last hour and a half ish of every trading day, the banks have to reconcile positions. There's brokers that have to reconcile margin calls. And when that happens, a lot of the times the markets will make some kind of pullback and it'll be very predictable. And it's something that you can easily kind of um, prepare for in advance. And I'll show you exactly how I use it, so the tools I use to find it, and all sorts of things. Um, these are the only pairs associated with Europe and Europe only. So that out of 28 currency pairs, these are the three that are connected to just Europe. Now you can also use pairs like the pound dollar, the euro dollar is also really, really good. But like I said, I like these ones because these ones do experience a very clear cut close at the end of the trading day. So I really like these pairs. Um, Okay, so I have some best practices not to do this during news events. So you want to watch out for FOMC meetings, CPI, GDP data. Those days I usually back out. or I'll just trade currency pairs that are not associated with those specific news events. So like if it's a dollar news event, then I probably won't trade the euro dollar. If it's the pound dollar, I won't trade that one because it's with, if the news is with the dollar. If the news is with the euro predominantly, then I'll try to stick to the pound or something like that, right? Okay, so here's an example of when to buy and when to sell. So basically what you're doing is you're using a Bollinger Band, and when you get to the end of the trading day, which I've kind of indicated right here, if you hit a lower Bollinger Band during that hour to hour and a half before the market closes, you want to execute a long position because there's a good chance the market will bungee out of that and go up and drift that way for the rest of the remainder of the day. The opposite's true. You'll want to sell if you hit an upper Bollinger Band. If you hit an upper Bollinger Band within that last hour or hour and a half of trading, you do want to look to sell that. We typically take profits. Here's how we take profits. The standard take profit practice is to close most or all of your position at the mid Bollinger Band on a 5-minute chart. I personally like to close half my position for profit at the mid Bollinger Band and then hold the rest until the next major order block on a 5 or 15-minute chart. So I can show you guys, I'll show you how to do this in just a moment. For the stop loss, I keep it simple by using a volatility-based stop out mechanism. I use a fourth of an average daily range as my stop loss. I honestly think you don't need to use, that's kind of a bigger stop loss. I think what you can do instead, this would work. You can do this. This is fine. Yeah, because the average daily range on the euro pound is actually closer to like 40 pips. So a fourth of that would be like 10 pips. So a 10 pip stop loss is not terrible. Yeah, fourth of an average day range is actually not a bad idea. But I think an even better way to do, so you can do it that way. I think an even better way though would be to um, look at what your profit potential is. Like how far away is the mid Bollinger Band? How far away is the lower Bollinger Band from where you entered your position? Because that could determine what your RR ratio really is going to look like. Yeah, I think that's actually not a bad approach. Okay, cool. So let's actually jump into the charts. Let me show you guys how to do this.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So I'm gonna actually change my chart up real quick. So give me 1 second here, guys. I want to change my um I want to change what my chart looks like real quick. I want to change my background to a black background. I think it'll look easier. Yeah, this will look easier if we do it this way. Okay. And then can I change? No, that's fine. This is fine. Okay, so you need a couple of things on your chart. So first of all, this is the euro pound. We'll go look at the euro pound. We'll look at the pound franc. We'll look at the euro franc because these are usually pretty good currency pairs to trade with when you're using this strategy. So let's zoom in. You want to trade on a 5-minute chart. So that is one of the other requirements. Um, okay, so I pulled up a Bollinger Band. Now, if you don't know how to do this on TradingView, here's how you do it. You go to indicators and you just search Bollinger Bands, and you'll see there's several options. You're just going to want to use the one that says it's just this one right here in the technicals where it says Bollinger Bands. It doesn't have anything else. It's just flat out pure and simple Bollinger Bands. That's all the one. That's all you want. Okay. Bollinger Bands are this thing right here. So on my chart, you'll see I've got these three different lines that kind of follow the market here. Those are Bollinger Bands. Okay. Then you have I have this thing called sessions. Here's how you can find it. So the sessions puts a little box on my chart. The reason why I like this sessions indicator is so I can back test this. So if you ever wanted to back test this afternoon or this evening, this is how you would do it. So sessions is a nice little indicator, and I like sessions because I can here if I let me go and edit this real quick. I just want to see the London session because I'm going to show you the London session first, and then I'm going to show you guys the Tokyo session as well and the Sydney, and I'll show you the New York. New York's a little bit harder to trade because the volatility is so low at the end of New York, but nonetheless, I'll still show you how it works. So here's the London close, okay? So basically, the way this works is you want to draw up some lines. Like if this is so you can see this green box here. This green box is the entire London session today. Okay, so this is from 3 a.m. Eastern to 12 p.m. Eastern. That's the London session right there in that green box. Then what you want to do is I'm going to draw a line here. This right here is the end. That vertical line represents the end of the London close. Now, about an hour and a half before the London market actually closes is when you want to start to look for trades. So about approximately like right here is when you're starting to look for setups. I think the most ideal setups do come in that last hour, but so like the last hour would be like right here. That's so you probably don't actually need to look for setups an hour and a half before, but you certainly can. In fact, I'll show you right here. You can look for setups, but basically the idea is if the market goes above the upper Bollinger Band or lower Bollinger Band within this hour to hour and a half period, you want to execute a a counter trend signal. So it's a counter trend trade. Okay, right here would have actually been a trade. Potentially, you could have sold right there. That one I think I would have either stopped out on. Yeah, you probably would have lost on this guy right here. But this one is perfect. So you can see right here this bar just about 10 minutes before the London market actually closed. We certainly did break above that Bollinger Band right there. And so when that happens inside of this window of opportunity, you want to execute a sell position. And so far that would be the right trade because this is now ever since the London close, this is now drifting off. So that's the sell opportunity. The opportunity is to fading meaning that you're going against what the market has done during that hour period, and you're now selling off the other way. So usually you want to close this when you hit the mid Bollinger Band to lower Bollinger Band. That's basically the trade opportunity in a nutshell. Let's go and look at this next one right here. So here's the next day right here. Okay, so this next opportunity looks like this. So you've got um, the London close right there, and then about an hour and a half before you're looking for opportunities. So an hour to an hour and a half before. So this is your window to look for trades. Now, right here, it looks like we did hit an upper Bollinger Band right there. Okay. And it looks like we hit it right there as well. Um, looks like we got pretty close right here, but we didn't quite hit it right there. That would have been nice to have been to buy right there, but I didn't take that trade. Um, but yeah, once you puncture through the upper Bollinger Band, it's go time. It's time to sell, is basically the idea. Um, so with this one, um, um, you could have sold at any one of these prices, and the market pretty much drifted away the rest of the day, is the idea, right? So we hit those. Now it's time to sell off right there, and it looks like that was a really, like I said, really easy opportunity. Let's go look at another one. Okay, so here's another day. So here's the end of the day right here. And then an hour and a half before this would put you about right here. And there's um the main opportunity I believe is right here because that clearly did break above the upper Bollinger Band. This almost hit right there. Almost hit the lower Bollinger Band right there, but it didn't quite hit it, so I'm not going to count it. It does need to break above. You need to break above the upper Bollinger Band or lower Bollinger Band, and then we did right there. So at the end of the trading day, we hit right there. That would execute you into a sell. Okay, you're going to sell when that happens at the end of the trading day, and sure as heck, this thing floated off. Basically, the rest of the day, this thing just kind of melted away after that point right there. Um, looks like the ideal would have been to close right here. Now, by the way, I just want to give you a sense of how many pips you're making or losing on this. It's not a lot of pips. This is not a huge opportunity. Most people are making anywhere between like 5 and 10 pips a day just doing this. It's not a lot of pips. It's just a very high probable setup that just makes 5 or 10 pips a day. That's basically what you're aiming for. Right here, from that entry right there to this low, that's about 6 pips. Now, if you had gotten in at the very optimal price right here and closed right here, you might have made 9 pips, right? So it's not, like I said, it's not a lot of pips, but you are making a lot of money per pip. So because you're putting typically your stop loss is gonna be pretty tight, and your naturally your lot size is going to be a lot bigger because your lot size is your stop loss is smaller. All right, let's go look at another day. Okay, so here's the end of the trading day right here. And then we're looking for trades about an hour and a half before. So that puts you about right here. Okay, so anything in this window would qualify. And it looks like pretty much right away, right at the start of the window, we are already hitting an upper Bollinger Band um, right at the end of the day there. And by the way, I also want to say, like, usually you want to go counter or fade what the market's done all day. So here's the beginning of the London session. It's gone up all day. Usually at the end of the day, um, the best trades are the ones where you can go counter to what the market's done all day, which this was going up all day. Within that window is when we got the opportunity. Sure as heck, that thing pulled back and all this money was made right here. Okay. So this was a pretty good little setup. And this one from its top, from the very top to the very bottom, made about 12 pips. So again, it's not a ton of pips. It's not a ton of pips, but you can make hundreds of dollars on just 5 or 10 pips. You just have to manage your risk correctly, right? So with an opportunity like this, how much money, what's your stop loss? Again, you can just use the standard fourth of an average daily range. So, and you can find that on the scanner. You can actually go straight to the scanner here. You can search the euro pound and find out what that is. So, okay, it's like 37 pips is the average daily range. So that's easy to figure out, right? So all you got to do, if you want to do this method, you're just going to take 37 divided by 4. And so you're looking at like a 9 pip stop loss if you're going to trade this. So you'd come back over here to the chart and you're looking for 9 pips. Yeah, you're looking for about a 9 pip stop loss from where you entered. So your stop loss would be, let's see, let's do a, if you entered right here, stop loss would be about 9 pips max. And then your target can be about the same or something like it. Now, like I said, I think these stop losses are a little bit big. I don't think you need the full 9 pips. Obviously, in hindsight, I'm like, oh, I didn't need the full 9 pips. You definitely don't need to risk that much. So I think you can tune it in more to what the opportunity gives you. So if you can see that the lower Bollinger Band is, you know, 9 pips away, maybe have a stop loss that's more like 5 pips or 6 pips or something like that, right? See, that seems a lot more appropriate, that type of trade right there. That way you're getting closer to a 1 to 2, if you can keep it tighter like that. In fact, this one, if you actually kept it at 4 pips, you would have been fine. And that does give you a 1 to 2 right there. So that one was really nice. That's really good. So that's the window of opportunity is right in here. So here's the thing. The trade doesn't need to close inside of this window. You just need to enter inside this window. Okay, so the trade actually gets executed in this hour-and-a-half period if the opportunity comes along, but you're often holding the trade past the hour, but you're no longer looking for the setup. The setup has come and gone in that hour and a half, but you're just holding the trade to fruition at that point. That's all you're doing. Okay, let's look at another one. And then maybe we'll go look at a couple of different currency pairs in just a second. But um okay, so let's zoom into this one. So this is the euro pound and again, I haven't been checking for news on each one of these days. I'm just assuming there is no news, right? So on the days where you have lots of news, those are the days where um if there's a lot of news, um we don't trade this, right? So this market all day pretty much was coming down all day. And then within this hour-and-a-half period, we hit a lower Bollinger Band right here, as you can see. We hit that lower Bollinger Band. Okay. And that would be an entry, right? So we're within that hour-and-a-half period. That's time to buy. And sure as heck, this thing went up from here. Absolutely went up from there, which is pretty cool. Um, so what would this look like? So what's the opportunity? So what could you have made on this trade from your very best spot? Let's say you got that to your very best exit, which could be here or here. It's about the same. It's like 8.5 pips. So again, you're not going to make the full 8.5 pips because that's best case scenario, right? So you definitely could make half that. You could make 4 or 5 pips on these trades. So again, no, I wouldn't get super like you're not trying to get a home run out of these things. These are just a way to make some extra income that's a little bit more probable. Okay. By the way, let me ask you guys this. Would you guys like to do this in the live trading calls? Because this is technically inside of the window of the live trading calls. Would you guys like that, or is this something that you wouldn't be interested in? I'm just trying to get a gauge for I know there's not a lot of people in this call, but I was just curious if anybody would like to trade this or if this is not. It's cool. If you're not interested in it, I totally get it, but I'd just be curious to know if anybody is interested in this type of style of trading. Okay, so this one, here's the day. So the market was generally coming down all day. Here's the window of opportunity. Um, here's the window of opportunity. This one's kind of interesting because um, pretty much right away, like we're hitting lower Bollinger Bands right in the window, like right at the first hour and a half window to start. The first like 10 minutes, you hit an opportunity, and then it does go up a little bit. It goes to the mid Bollinger Band, which is technically where you would close half your position anyways. Um, and then right here, um, you have another opportunity. So you can have multiple opportunities in an hour. And then this does finally come back up. It gets close to that upper Bollinger Band there, but not a lot. So this one worked, but it's not like it made a ton of money. Like this one, you probably made like 3 or 4 pips. Yeah, not a ton. Um, so these opportunities can be very anemic, but again, usually make up for that by having a bigger lot size. Um, it looks like if you had held on though, later, it looks like later in the afternoon, this market did finally come up to a solid amount. So you could have stayed in and made a little bit more, not a ton though. It's very limited. Okay, let's look at one more with the euro pound, and then we'll go look at maybe like some of the other currency pairs. So here's the euro pound on this day. Looks like most of this day the market was up. And then let's see, here's the end of the trading day right here. And then the hour and a half period before puts you at about right here. Oh, that's perfect. Yeah, that was pretty well perfect, actually. Um, this one came up. Oh, it looks like it didn't quite, actually, never mind. It didn't quite hit the upper Bollinger Band. I mean, I guess you could have sold it there, but it really didn't hit the upper Bollinger Band. So I don't know if you would have entered. It does look like it hit a lower Bollinger Band right here. Um, so the potential to buy was right there. Um, and then it looks like you could have held this um, throughout the rest of the morning. Looks like there was an opportunity to close it there. Not a huge opportunity though. To be honest, the real opportunity was right here. This is the real sell. It just doesn't look like it quite hit that upper Bollinger Band though. Um, we might need to work around that because that, if you think about it, that's really the opportunity because the market was up all day, and then you get to this hour and a half period where the market's up and it's due for a pullback, and it certainly came. And this one did have a lot more pips to make if you did sell right there. Okay, that's pretty cool. So that's that. Let's show you some of the other pairs. So if you're looking at the other pairs, let's go to like the pound franc. Let's go look at that one. This is one of the pairs you can use for the banker's close setup. And let's go back to today. And let's see if there were opportunities today to trade this. Okay. And again, I haven't checked the news on any of these days. I'm just going off of pure price action, right? So here's the end of the trading day. Here is um, the last hour and a half right here. This is the window. Okay, so when do we start puncturing through the lower Bollinger Bands? So we puncture the lower Bollinger Band right there. It looks like we touched it though, right there. It looks like there was a little bit of a touch, but we actually punctured through it a couple of times down here. So this opportunity, definitely an opportunity, very limited though on today on the pound franc. Um, Looks like it did go up to some extent from this low. Yeah, it was only like 7 pips, 8 pips total. Um, yeah, this was a pretty limited opportunity to be honest. But hey, you either would have made a little bit or lost a little bit here. I don't know if it would have been really one way or the other here on this one. So let's go look at the previous day. Okay, so here's the end of the trading day right here. An hour and a half before that would put you right here. This was perfect. This is picture perfect. This is exactly what you want to see on this one. Look at this. So the market, this green area is the London session. The market was up all day, and then starts puncture pretty much right when you come to the computer, it's puncturing through this upper Bollinger Band. And for the next like 10 minutes, it punctures above the Bollinger Band. And that's a super sell right there. That's awesome. That is just clean cut right there. Boom. Clean cut. And that pulled back. This is a lot more pips. From the very top there to the very bottom, that's 33 pips right there. Um, I'm not saying you would have caught all 33 pips or I would have caught all 33, but even if you caught half with a pretty big lot size, that's awesome right there. It looks like there was even a second opportunity. Like you could have closed out and even started to buy right there at the end of the day, trading day right there. You hit the lower Bollinger Band, and it looks like you actually could have gone the other way now. Could have made money both ways. This is so what I love about this time of the day is it is a time where if the market does something crazy, it's usually not gonna stay doing anything crazy after this period of time, right? So that's what I love about this. It's a very predictable time of the day because the banks do need to close off positions. And because of that, the market's unstable. And if it's up like this, usually going to have a pullback. However, like I said, this stuff goes out the window if there's a lot of news events. So if you have a lot of news events, I don't like to trade this strategy because uh, that news event can supersede this phenomenon. Okay, so you don't want anything that would cause the trade to not be successful during that period of time. Okay, here's another one on the pound franc. Okay. Here's the end of the trading day right here. And and then an hour and a half before this would put you right here. So this is when you would start to look for opportunities. And it looks like let's see, was this market mostly up or down? It was just kind of sideways actually this day, this particular day. So I don't know if you'd really have a bias on which way you would start, but um I don't know if you would call that an opportunity. It depends on if you hit the Bollinger Band during that time. Looks like you may have hit it there. For sure, though, the clear-cut opportunity is this area right here. That one clearly broke, punctured this lower Bollinger Band and closed um, while puncturing the Bollinger Band. That would clearly be an opportunity right here. And that one, yeah, that clearly did rally out of this area for the rest of the day. Um, you can see that went up 22 pips from its low to high. So I see that being reasonable to make about half that in pips. The pound franc has a little bit of a bigger ADR, so you can technically make a few more pips on this pair. Yeah, it's not a bad pair to trade. Okay, let's go look at one more here, and then maybe we'll go look at the Euro franc. We'll wrap up on that. If you guys have questions, hit me up with your questions. It looks like most of you guys would be interested. Danny says my prop firm is still down though. Oh, I'm sorry to hear that. Yeah, um, I'll help you out with that. Let's get that turned around. Okay. So okay, so here's an hour and a half before. So this is the window of opportunity at the end of the, oh, and I didn't even show you guys the Tokyo and Sydney sessions. I'll show you that in just a second. Yeah, we'll probably wrap up on that because this is just the London close. There is a New York close where the same thing happens. You can do this with the Sydney close. You can do this with the um, Tokyo close as well. They're at different times, but you can certainly trade that. Okay, so where's the opportunity here? So this market was mostly kind of sideways. It was, I'd say, mostly down. I don't know, it's just sideways from where it started. So it really, you don't really have a bias necessarily going into this one. But this one did puncture the upper Bollinger Bands inside of this window right here. That's when you punctured those upper Bollinger Bands. So that would cause for a sell, and you could sell in there. And it looks like there was an opportunity to close. Like you could have made your money from here to either here or from here to maybe here. It looks like it did continue drifting off over the next several hours, maybe even into the evening. It drifted off, but the general opportunity occurred right in here. So that's not a bad one. Okay, let me show you guys the Euro franc. So we just saw those are the two main ones, and then here's another of the main ones right here. This is the Euro franc. So it's three currency pairs that you're trading typically to trade the London bankers close. Okay, here we go. Here's the Euro franc. Okay, and you have right here. Um, oh, here's the window of opportunity. Here's the end of the trading day. This was today, by the way, and the beginning of this opportunity would have begun uh, right here. And yep, this was a good one today. So in this window, where did we hit? We hit this lower Bollinger Band right here. That was the opportunity right in there. And sure as heck, that thing did indeed pull up from this area. Um, nothing huge, but yeah, it's a probable setup. I don't think there was any news today on the Euro franc. And this one has a very small ADR. So again, you're not going to make a lot of pips on this. So in order to make money with this, you do need to put in a bigger lot size. And that's not necessarily a problem. I'm just letting you guys know that if you want to make some serious cash with this, it's very different from the weekly trades where we're working with tons of pips but small lot size. With this, you're working with um, very few pips. So in order to make some serious money, you have to use more capital. So, which is fine. That's nothing wrong with that, right? Okay, so this was a good one today, actually. That was pretty cool. Let's go look at the previous day. Okay, so here's Friday on the Euro franc. Okay, Friday. Here's the window of opportunity. There's the end of the trading day. That is the London close right there. And an hour and a half before this would put you at right here. Yep. And this one was pretty much right away, right through this entire region right here is where the market busted through the upper Bollinger Band. So that was all selling opportunities. So let's see how many pips this is. So you could have sold right at the beginning and you would have made just like 5, 6, 8, 9, 10 pips. But you could have made as many if you had sold at the top of that wick there. Could have made as many as 15 or 16 pips on that trade. And it actually looks like it set up a second time yet on Friday. Looks like you could have actually bought right there at the end of the trading day because you hit a lower Bollinger Band. So you could have almost had two entries out of this. Okay, let's go to Thursday last week. Here's Thursday. Okay, here's the end of the day. And let's do an hour and a half before this. Right here. Okay, where's the opportunities? So we didn't break any Bollinger Bands here until it wasn't until here that we clearly did break a lower Bollinger Band right there. And that was a good opportunity. That was pretty good on Thursday last week with this pair. Towards the end of the trading day, we clearly did broke there and that went up for the next couple of hours from that low right there. Not a bad one. Okay, let's look at one or two more and then I'll show you guys the Tokyo close and I'll show you what pairs to use and all that kind of stuff. Okay, so here's the end of the trading day here. An hour and a half before this would put you about right here. And let's look in here. Did we break an upper or lower Bollinger Band? Yep, we did. This one was pretty simple. We broke the upper Bollinger Band right there. That's easy to sell. That's easy to sell off right there. And it looks like you might have been able to get into a small secondary opportunity right there as well, potentially. But looks like the main opportunity was made right here. That's pretty cool. So that's a fun little strategy, guys. And I passed an FTMO challenge about 2 years ago, just trading that alone. I didn't do anything else, just that. So, and a little recap on your stop loss and take profit. So typically you want to take profit in two different places. You want to close when you hit the mid Bollinger Band, you want to close half your position. And then the full position, you typically close at the lower Bollinger Band or just the opposite side Bollinger Band. So if you're up here, you're selling. So you'll close half here and you'll close the other half down here. And so when you're calculating what that looks like, that's when you can figure out your stop loss. So you can be like, okay, well, this is my trade I'm selling right here. I'm going all the way down to here for my target. So if I want to have a 1 to 2, I need to put my stop loss about 5 pips away. Or if I'm just okay with a 1 to 1, then I'm going to have my stop loss about 9 or 10 pips away. Right. So there's definitely a couple of ways you can do that. Okay, so those are the three pairs you'll typically use. One way to manage this is to have a couple of screens where you can, or just on one screen, have three different charts on the 5 minute time frame with the Bollinger Bands already pulled up. That way you can see which currency pairs are setting up and lining up right away. So okay, so that's pretty fun. Let me show you guys the Tokyo close or the Sydney close. Let's see which is one that's more likely to be traded for you guys. This one's a little more tough. The Tokyo close, I believe, is it's like at 4 a.m. Eastern. So it's a really tough time to trade. The Sydney close, if I recall, is like at 2 a.m. Eastern. So that's another tough one, but maybe maybe I'd just like to show it to you anyways. Um, um, so I usually like to trade the Aussie Kiwi if I'm trading the Sydney close. Let me, oops, I didn't want to break that. Um, this is not a bad one, the Sydney close. So you can just turn on Sydney when you're using the sessions. And you can do this with me real quick. So let's look at a few of these real quick. So That's where our trade is. So that's kind of in the way. But if I look at this, like right here, here's the Sydney close. Okay, that's the end of the day right there. That's the end of the trading day. An hour and a half before this would put you at somewhere around right here. And it actually looks like we may have hit a lower Bollinger Band right at the opportunity. And that could have been a nice little trade to ride up at the end of Sydney. Um, it looks like you could have had an opportunity very quickly right here. That one pulled back within 15 or 20 minutes. You're done with that trade right there. Right? Pretty cool. Um, let's look. We won't spend a lot of time on these ones because I know not a lot of you guys have the ability to trade these hours. I'll show you the New York close. That one's like especially small. I think it's even the smallest one, ironically, because you'd think the New York close would have a little bit more movement, but it's really not as significant as you think it would be. Okay, so here's another Sydney close right here. So you'd look for trades about an hour and a half before, and yeah, sure enough, right away, actually, you have an opportunity to buy right down here, and then you could ride that up to the middle and upper Bollinger Band here, and you're done. But it even looks like right at the Sydney close, you have an opportunity to sell right there. That one was pretty nice. About an hour later, this thing just fell off a cliff right there. So not too bad. Definitely a huge opportunity. Let me show you guys the New York close. So with ones like that, you can trade like the USD CAD, the Euro dollar's not bad. I think the USD CAD's probably my favorite pair if you're going to trade the London close or the not London, New York close is the best one. So let me show you. That one might be a better. You guys might have more time to if you live in the United States, you might have a little bit of a better opportunity to get into that one. Let me show you that one real quick. So let's turn off Sydney. Let's go to the New York. Let's turn on the New York and let's go to the USD CAD. And let me show you the USD CAD and how this works out. Okay, so let's go to today we're actually still in the middle of the session right now. So we don't have a close yet today. I'm going to show you when that's actually coming up pretty soon though. You might want to start looking for trades on this in about 45 minutes is when you would start looking for that window of opportunity. But let's go look at Friday. So with this one, you're looking for trades. Um, this is tough though. Friday's a terrible day to trade it because usually you need follow through later, but we don't get follow through because Friday you're done trading basically. This one didn't even have a setup, even if you wanted to trade Friday, because that's the end of the day Friday. And then an hour and a half before this would put you about right here. And yeah, you could have sold right there, but it didn't actually hit the upper Bollinger Band. So, I mean, you could have, but you're pushing the letter a little bit, the envelope. And yeah, you could have made, 10 pips in the last hour and a half on Friday if you wanted to. But let's go look at some other days. So let's do the same thing on like Thursday last week. Okay, here's a good one. So this is actually not too bad. So you got a couple of opportunities here. This is the end of the trading day right here. And an hour and a half before this would put you about right here. And yeah, you hit a lower Bollinger Band right there within 10 minutes. And we hit an upper Bollinger Band up here. So you could have traded either one of these. It looks like the best opportunity was the second one. It drifted away and you got follow through. You got a lot of follow through later, right there. But right here, you could have bought this one and just traded that. That would have only taken you about 20, 30 minutes to make your money on this one. And yeah, it's about 8 pips. That was how much you could have made. Again, it's not a lot of pips, but it definitely works. The other way, you could have made as much as like 16 pips or something. So, oops, let's get this back on. Sorry, guys. My, there we go. Sorry about that. All right, let's go back. Let's go look at one or two more. Okay, we looked at that one already. Okay, I don't think we looked at this one yet. This is from Wednesday last week. Wednesday last week, right here. Okay, so Wednesday last week, right there's the end of the trading day. And an hour and a half before this would put us about right here. And yeah, I think it's hidden right there, but I think it did hit the upper Bollinger Band right there at the end of the at the very beginning of that hour and a half period. And yeah, that was definitely a sell-off opportunity right there, that hit the middle and lower Bollinger Band. It pretty much drifted this way for the next several hours. Not bad. Let's look at maybe one more. Let's go to Tuesday last week. Here is the New York close right there. And in about an hour and a half later, that puts us about right here. Yeah, that's cool. That hit right at the top of the hour, right there. And then it basically just came all the way down to there by the end of the close. So, how many pips could you have made on that? Looks like you could have made, yeah, it's not a lot. It's like 8 pips. So, like I said, guys, you guys can trade the New York close. And by the way, if you want to do it, the window begins in the next 40 minutes. 40 minutes from now is when the window begins. So you could technically trade this today. And I pretty much just exclusively trade the USD CAD. I don't try to go with anything else because the USD CAD is very pertinent to the London session or the New York, excuse me. Obviously, it's probably the most pertinent Forex pair for the New York session. It's the only two major currency pairs uh, that run through the entire New York session completely open. So I like this pair for that purpose, the USD CAD. But like I said, you got to put a big lot size on this if you want to make this thing work. That's really the only way to make a lot of money with it. Um, cool. Let's see. Tyrell says, cool thing about it is that you can just adjust the session to show the 1.5 hours and then let's set alarms for upper and lower Bollinger Band breach and middle for take profit. Yeah, 100%. Yeah, absolutely. So like I said, I usually take half the position off at the middle Bollinger Band and then let the rest of it go till you'll hit the lower Bollinger Band. You might not want to close the trade in the middle of the doldrums right here, but an hour after the doldrums is over, you could close out the trade maybe in here for a complete close. Absolutely. This one actually drifted. This one just kept drifting all the way out to here. Oh no, it kept drifting. So that was technically on Wednesday, that was the high. That was the high right there. So it's pretty cool. Yeah, we might start trading this together. I'm curious to see if it gains a lot of popularity. We haven't done this in a while because we've been focused on the COT report, which I don't want to get away from that. I do want to stay with the COT report and the scanner, but this might be another additional way to make a little bit of extra money, which could be super awesome. So, all right, guys. Well, we'll go ahead and wrap up. Appreciate each one of you. Have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.